Hey guys, welcome back to the final episode and thank you for sticking with us. This is the last one. It's going to be a little bit shorter. Whoever doesn't know the past is doomed to repeat it. What we're trying to do here is learn from people that have already done it, whether it's real estate, business, or life in general. This is my last sip and this is the last episode. So sit back guys. Thank you once again. We appreciate you guys taking time. It means a lot to us. And thanks for being here. I mentioned that this Trammell Crow series, this exclusive document, is somewhat like the real estate Bible. And I believe that. And it's funny because this actually has their own commandments in this one. So real quick before we dive in, guys, if you can like, comment, share on our Instagram and Facebook, we're going to enter 5 people in to win this exclusive document. We'll send it right over to you. We think you'll really enjoy it. So let's jump right in. This is titled, Rules for Riding Out the Real Estate Storm. Date, January 91. Development's day of reckoning has finally come. Anthony Downs, senior fellow at Brookings Institution in Washington, D.C., told a UIL audience at the fall meeting in Chicago in early November. The blunt reality, he said, is that only if new development experiences a deep recession can the prosperity of owning and operating existing properties be restored. There has been a fundamental and worldwide shift in real estate capital markets. Downs explained, whereas the 1980s saw a flood of capital from many sources that generated development, the 1990s will see a shortage of capital that will choke off new development except for deals clearly fortified with equity, huge pre-leasing, or both. Moreover, the U.S. economy in general and the population that underlines real estate in particular will grow more slowly in the 1990s. All of this bodes ill for new development, but after a period of falling rents and prices over the next year or two, it augurs well for ownership and management of existing property. So the next year or so are going to be difficult for both new development and ownership. Comes to mind, this too shall pass. If you had followed my advice over the years, Downs chided the development in the audience, you would have known that this day was coming. Hence, you would have prepared for it, partly by accumulating ownership portions and cash. But Downs likes to view the situation positively. The fundamental changes in real estate market from the money surplus and rapid demand growth of the 1980s to the money shortage and slower growth of the 1990s needs not be a message of despair or gloom for the real estate industry as a whole. Real estate will remain a pillar of our economy and society. And he offered advice based on a remarkable new discovery made by an archaeologist friend of his. In a cave on Mount Sinai, preserved in a huge jar, the archaeologist discovered a set of scrolls, somewhat like the famous Dead Sea Scrolls, but apparently written for ancient real estate developers. 8 specialized commandments, authorship unattributed, were thereupon inscribed. The first commandment is, thou shalt manage thine existing assets with thy whole heart, thy whole mind, thy whole soul, for it is those assets which will sustain thee. The second commandment is, honor thine existing tenants as thyself, for without them thou shalt perish. The third commandment, which Downs calls a biggie, is thou shalt not commit new construction unless thou hast pre-leasing with AAA credits to yield a positive cash flow when thy building opens. The fourth commandment is, if thou must create more space, thou shalt focus on renovation of existing properties, preferably in locations where tough zoning creates quasi-monopoly positions. The fifth commandment is, thou shalt maximize thy cash holdings and avoid debt like the plague. The sixth Downs calls is a tough one. Thou shalt shrink thine own organizations before its overhead dives it into the grave. The seventh is, thou shalt not sell assets in a period of falling prices unless dire need for cash is there, or unless thou received a really, really great price. And the last commandment is, thou shalt not despair in periods of adversity. Let the brethren bureaucrats of the dreaded Resolution Trust Corporation follow the pagan principle of CTA, or cover thy ass. Thou shalt instead follow the holy principle of CTB, count thy blessings. Remember the 10 years of milk and honey that came before a few years of the drought thou art now entering. Downs admitted to the UL audience that he was amazed how well the ancient commandments fit into circumstances today. In fact, he suggested, if you follow the undoubtedly ride out the current storm, then when vacancy rates finally fall enough so that rents can stabilize and start rising and any property ownership comes into its own again, you can adopt a truly positive attitude. There it is, baby. Trammell Crow, the Real Estate Bible. We appreciate you guys so much. We're really serious and committed to what we're doing here, and we want to continue to learn. And the more good people that we can get around, the more lessons we can learn. If anyone has any documents like this or any wisdom or real estate guidance, we'd love to hear it. We'd love to see your comments, and we're going to continue to put out content as much as we can. We're going to continue to try to innovate. We're going to continue to try to push the limit and be the best brokerage in the world, in the sense of this is where you come to get more for yourself and to be entrepreneurial and to learn how to grow together with other people and to add value and to have fun doing it. Life's short, but we really care, we're really passionate, and we appreciate you so much. So thanks for sticking with us with this series. It was a long one, it was a little different, different vibe, different energy, but we love it and we appreciate you guys so much. I hope you have a blessed day. Thanks again.